Well, hello there, people. Welcome to another edition of Tip Tuesday. Jeffrey Nance here with you. And today we are going to be talking about how to think through a bear market. So we have officially entered bear market territory as of yesterday. So we are in a bear market. For some of you guys, this might be your first time to actively be paying attention to what things are like in a bear market. We're going to look at three different ways to consider what to do with your money during a bear market. So, number one, do nothing. Just sit there and ride it out. And in fact, this is a pretty common way, sadly enough, for many people to approach a bear market. They don't really know what to do. They just sit there and go, what are you supposed to do? There's nothing else I can do. Where would I put my money? So they don't really have a plan and they just go, well, I'll just ride it out. Historically, the market has always recovered from a bear market. So just ride it out. Now, we really don't want you to do that. And I will come back and share with you a little bit later as to why that's not an ideal choice, but it is the choice of many. Number two, you can go to cash. So if you have your money in mutual funds or in stocks, you can choose to simply just sell those mutual funds or sell your stocks and then just put the money in cash. So you can leave it where it is, but rather than it being in the stocks or in these mutual funds, you just simply sell. Now, you won't really lose any money. You won't gain any money, but you'll have the amount that you have right now. So if the bear market continues to drop, you'll look back at the end of this when others have lost 20, 30, 40% of the money they had in the market and go, I did okay. I was in cash. And then option number three is to actually trade during this market. So if you have the knowledge and skill sets, you can actually make money during a bear market. Now, this may come as a surprise to many of you. Because if I asked just people out on the street, let's just say I was out on a busy intersection, I said, how many of y'all think it's possible for the average person to make money in a bear market? Most of them would say, no, nobody makes money in a bear market. In fact, that would be the prevailing thought, is that pretty much everybody, and then they may even use that term, everybody loses money in a bear market. And the reality is that's just simply not true. And why is that not true? Well, let's just say I was out there at the intersection and I dropped $100 bill. Now, that money might be lost, but I can also assure you that it was found. Okay. So money doesn't just simply disappear. So when a bear market occurs and everybody says, oh, I lost so much money, I lost this amount of money in my account, I lost this amount of money in my account, it's not because the money disappeared. Where did the money go? Well, much like that $100 bill that I dropped, it went into somebody else's hands. So who would have the ability to make money in a bear market? It would be people that can do one of a few things. One, those are people that know how to short stocks. Now, we're not going to go into too much detail today as to exactly what shorting stock means, but essentially, shorting stock is the ability to sell stock you don't even own. So you can sell large numbers, and in fact, that creates a high number of stocks that are available on the market. And if you're familiar with supply and demand, all of a sudden now there's a huge supply of stock and there's not many people that want it. Obviously, don't want to buy it at high prices. So now there's a lot of stock, but not a lot of demand. So now we have a high supply and a low demand. What naturally is going to happen to the price of that stock? It's going to have to drop. It's going to drop and drop and drop until you can eventually find some buyers. So they short these stocks, they sell it, they flood the market with these stocks. And then, of course, they're making penny for penny. So every penny it drops, they make that penny by shorting the stock. Now, that doesn't come without some risk. It often requires that you have a significant amount of money. Now, you can do it with a smaller amount, but there's just some clear risk involved there. The other thing that you can do is you can buy options. So there's an option called a put, and it's the right to sell a stock at a certain price. So if you buy this put option, it allows you then to benefit as the stock drops. So in fact, the further stocks drop, the more valuable that put that you bought becomes. Again, we have a whole session where we talk through what that looks like and how it works, but that's what a lot of our students are going to really try to hone in on, is the idea of doing puts. Now, along with that, you also have the ability to do any combination type trades. So that would be any bearish position, and there are a number of these. You've got your bull put debit spreads, or sorry, your bear put debit spreads. Then, of course, you would have bear call credit spreads, and then there's any number of combinations of bearish positions. So you could go debit spread, you could go credit spread. You could also ride a covered call. That's when you're in a long position, but you're selling calls to open a position. You benefit from a drop that way. So there are a number of positions that you could take where you would benefit by either buying or selling particular options during a bear market that would benefit you as the market moved down. So those are your three primary options. What we don't want you to do is to stick around, watch this thing fall day after day after day, and then when it gets near the bottom to finally get out. That's not good. So let's go back to the first thing that we talked about. What do a majority of people do? Really, from a lack of knowledge, they simply buy and then they simply hold. They have no real plan, so there's not really anything they can do besides just sit there and ride this thing out. And they've been told by their money managers, remember, the S&P recovers, and historically what they are saying to these people is 100% true. Historically, the S&P has recovered after every single bear market we've ever had in history. And if that weren't the case, then we wouldn't be at new all-time highs. Okay, so we've created new all-time highs even within the last few years. So the last bear market we had was in March of 2020. That was the COVID bear market, really, really short-lived. And that's the next thing I want to talk about is what is the length of time where a bear market might last. Over a 50-year period, the average bear market lasted 6 to 9 months. Now, the biggest two that most people remember was basically that 2001 bear market. It lasted about a year and a half. During that time, the S&P lost half of its value. So it was around 1,500, dropped down to about 750. And that's so you can just imagine, like, most stocks lost half of their value during that 2001 bear market. So it lasted a little bit longer, a full year, and the market lost half its value. Fast forward ahead, market recovers, gets back up to 1,500. This is around 2007. So this is about 6 years later when the market finally recovers. Now notice the time period there, 6 years later. The S&P gets back to 1,500. Remember, where did it start this fall? 1,500. So in 2000, the S&P was at 1,500, started the fall, dropped down to 750. Recovers, but it takes 6 years for it to cover. Now, that's a really, really long time for the market to take to recover, but that's what it took. Recovers 2007, 2008. We know what happens there. 2008, we get the Bear Stearns stuff, and now all of a sudden people are concerned, what's going to happen with the market, and people can't pay for their houses. What else can they not pay for? The market again drops. 2008, you get this big crash there. And the S&P drops to 700. So again, we see another opportunity here where the S&P gets cut in half. So now you've been through two different bear markets lasting a little bit over a year to a year and a half, but you've lost potentially half of the money you could have gained. And then it took you a substantial amount of time just to get back to where you were. Now, why is this significant? For two reasons. One, yes, historically, the market does recover. But let me ask you this. If you have $10,000 and you lose 10%, how much does it take to make it back? Most people would say, well, you lose 10%, you go get 10%. All right, well, let's do the math. I got $10,000, I lose 10%. All right, now I have 9,000. So 10% of 10,000 is 1,000. So I have 9,000. Now let's go make 10% on 9,000. Oh, wait, I don't have 10,000 now. I made 10% on 9,000. I have 9,900. So the reality is I'm not even. So just because the S&P might have lost 10% and gained 10%. I'm actually behind. I'm going to have to make 11%. And guess what, guys? If you lose 20%, now you've got to make 25% just to get back to even. Here's what happens when you get all the way to 50%. When you lose half of your account, now you're going to have to double your money just to get back to where you were. So if you had gone straight to cash, that's option 2. Just go straight to cash right now. Ride this thing out, just be in cash and let it do whatever it's going to do. By the time the S&P doubles and your account doubles, you'll be right there where that person is today. So if that takes you a year, 2 years, 3 years, 4 years, 5 years, 6 years in that 2001 stretch, it would take you 6 years for the S&P to double to get back to where it was. And now you're sitting here going, wow, wait a second. What if I just taken my money out? That would have been better. Because what if I had gotten in at the bottom when the S&P doubled? What if I had put my money back into the market during that stretch while the S&P doubled? Would that have benefited my account rather than riding it out and then getting back and riding it out and then dropping and riding it out and then getting back in and riding it out and then basically being at the same spot 7 years later? Are there opportunities for me to take a very different approach? And we would say yes. And obviously, if you just lose 40%, then it takes 67% just to get back to even. We don't want you guys just being even when the reality is the market's going to do whatever it's going to do. So, the last bear market, March 2020, only lasted about 6 weeks and then it was over. I have a suspicion, though, that this time, with the economic factors that are out there, it's going to be a little bit longer. Now, it doesn't mean it will be those years that we saw 2000, 2001, 2007. It may not even be as great as those were. Now, we do have an inflated market. We have plenty of room for it to fall. But it may not last that long. But there are some economic factors out there that are looming that could create an atmosphere where we could see a bear market for quite some time. We'll figure out here in a couple of weeks whether or not we're officially going to enter a recession, which is 2 negative GDP quarters in a row. And most people kind of at this point assume we will be there, which is, an interesting place to be. But again, we feel that. We feel it at the pump. We feel it at the gas, at the grocery store, restaurants. I mean, everything costs more. They can't get inflation under control. So we're starting to see some of the repercussions of that. But I think we're still on the surface here. I think there's some deeper things that are still to come that are going to negatively impact our economy. So we may be in this bear market for a while. You guys need to kind of decide, do I want to try to trade this market, try to actually make money in a bear market? That's pretty cool. Most people don't even have the ability or knowledge that that's even possible, nor do they have the skill sets to do it. So that's something cool about saying that's the approach I'm going to take. Do you simply say, you know what, I'm going to go to cash because I don't want to ride this thing out because I don't know how far it's going to drop or how long it's going to drop? Or do you say, you know what, I don't really have the knowledge, I don't really have the skill sets, I'll just ride it out and we'll see. Hopefully it won't last long. Hopefully it'll be like the last 2 bear markets where it's over very quickly and then we're riding back to new highs. And you can do that too. But we don't really want you to do that, especially when there's better alternatives. So we're in a bear market. We don't know how long it's going to last. We don't know how low it's going to go. There are a number of factors that could influence that. But you have a choice of how you're going to treat your money, the money that God has blessed you with during this time. And we want you to be wise with that. Take advantage of the knowledge that you have. Take advantage of the opportunity that you have. But be wise with the Lord's money and take appropriate action. And that is today's tip. Thanks for being with us. See you next time.